the Fed and all this stuff is hyperinflation. And I think that's why the why is why you'd better start buying some gold and silver or uranium or copper. I started getting into silver when I was like 1964, when I saw that copper tinge go around the dime. So I bought my first precious metal at 10 cents, because I started changing the copper dimes in for real dimes. And then I was buying quarters and then $half. And I still have that bag until my mother spent it. And then I was flying in Vietnam in 782, the year Nixon took the dollar off the gold standard. And I flew behind enemy lines in Vietnam to a gold mine. I was reading the maps, as a helicopter pilot, and said, oh, they have gold here. And so I went behind enemy lines to talk to this gold dealer. It was a little tiny Vietnamese woman with red teeth. And I said, she wanted, I think it was at $50 approximately, gold, and floated from 35 to 50 after Nixon took the dollar off the gold standard. I tried to get a discount. You don't do that, I know you're laughing at that one. You get a discount from a gold dealer? That's not heard of. And she told me this one word, spot. Que pasa? What is spot? But ever since then, and then I went over to Hong Kong. I bought my first Krugerrand. This is an important point for many people to understand about silver and gold. I bought that Krugerrand in Hong Kong in 1974. I had to smuggle it in. And I want you guys to hear this, because Rick will understand where I'm going with this thing. They made me smuggle it in because it was confiscated, I think in 33 or something. And today, because of what Nixon did and the Fed and all this stuff, what Charlie Munger, who's above his partner, is talking about is hyperinflation. And I think that's why the why is why you'd better start buying some gold and silver or uranium or copper, getting into things that what Jim Rickards called things that last. So with that, and one more thing is that Kim and I own no equities. We're about 95% private. So we don't own ETFs and all that stuff. We own the gold mine. So Kim and I purchased, secured a gold mine in China, the biggest gold mine in China. And they confiscated it, just like just like Roosevelt took the gold. There's more to gold and silver than just what the moving average is and all that stuff, And the last thing is, then we found a gold mine in Argentina, and then Kim and I sold it to Yamana. So we don't have public shares, we have private. And I still eat Chinese food, but I'm not happy with the Chinese. So with that said, I hope I've teased your mind as to why the heck Kim and I are fanatical, gold, silver, and today a little bit of Bitcoin, simply because I don't trust the Fed, I don't trust the Treasury, and I don't trust the government.
Precious metals have moved up in price over the years for many reasons, most of them not good. It has functioned for years as a medium of exchange and a store of value, and that's important to know. Most mediums of exchange that we use are abstractions, floating abstractions. Our mutual friend, Doug Casey, once said that the dollar is an IOU nothing, and the euro is a who owes you nothing. They're, in fact, promises printed on a piece of paper. Gold isn't a promise to pay. It's payment in and of itself. It has value separate and apart from a medium of exchange, which is important to know. You mentioned trust. If you acquire gold that you are relatively certain is what it purports to be, you don't need to trust the counterparty. It isn't a promise to pay, it's payment. And when you use that, yes.
Rick, can we explain what a counterparty is real quick?
A counterparty is the person who sold you the gold or who you sell it to. It's the other part in a transaction. Right. When you go to the grocery to buy bananas, the grocer is the counterparty.
Right, or if you lend money to your friend.
Yep. And
they'll pay you back. That's the counterparty.
Yeah, the important thing about gold and silver is that they aren't checks or they aren't fiat currency. They're payment in and of themselves. Right. And in periods of time when there are various forms of turmoil, war would be an example, and social trust is very low, precious metals do very well. I would suggest that there are 5 reasons why people need to be afraid of the maintenance of their purchasing power in conventional instruments, and why I think that gold and silver, pardon me, are much more likely to do well than poorly. If I may, I'll list them. People often say to me, Rick, when will you sell your gold? Well, when the reasons to own it go away, the gold will go away. So I'm going to give you 5 reasons why I think it'll go up, why I think gold will increase in price. And when those reasons are satisfied, then I'll sell my gold. It's a real simple answer. So let's do them. Quantitative easing, which is a real fancy word for counterfeiting. If you issued Kiyosaki's and went around and tried to spend them in Arizona or wherever you are, that would be a felony. And they would plant you in a slammer. But if you were Congressman Kiyosaki,
there you go.
Then this would be a highly popular policy, something for nothing, and you would be reelected forever. You, as an apartment building owner, every 5 years get to refinance at a lower interest rate. The capitalized value of your rents relative to your cost of capital is certainly low. Sadly, that's over. We've learned in the last 40 years that we don't have catastrophes, so we don't need to own gold. The consequence of that is that the market share of precious metals and precious metal securities relative to other savings and investment assets in the United States is less than 0.5%. Less than 0.5% of the value of savings and investment assets in the United States is in precious metals or precious metals securities. The 3-decade mean is between 1.5% and 2%. So if demand was to return to mean, not go crazy like it did in the 70s, Robert, when you learned about the gold trade, if the demand for precious metals returned to mean, demand would triple or quadruple.
So let me poke holes in my theory. Like I said, that little Vietnamese woman in 72, and she wouldn't sell me the gold at a discount. I couldn't believe that. I was just asking for $5 discount. She wouldn't do it. I saw the Vietnamese running with a gold leaf, not US dollars. And then I go to Hong Kong and I buy my first Krugerrand. I still have that Krugerrand. I paid $50 for it. It's in Switzerland now, but that Krugerrand is now worth approximately $1,900. So I'm always saying to Kim, I want you to poke holes in my logic. I don't save cash. I save gold and silver. And if I ever need the cash, I think gold and silver are liquid.
I consider, like you do, gold and silver to be cash, good cash, but it's volatile cash. The problem breaks down with some in your audience, Robert, because if they own gold and there was a liquidity crisis and the price of gold temporarily fell, they would be less inclined to sell the gold and turn that into an asset which they could then use to buy another asset. Many people, although they own gold, don't regard it as liquidity. They don't regard it as cash. And if let's say that their average cost in gold is $1,800 and the price falls to $1,500, the price of another asset that they want to buy fell by half, but they feel this strange compulsion not to accept a small loss in cash to take advantage of a bigger opportunity. So in that sense, psychologically, right, for many people, precious metals aren't cash. I don't suffer that same circumstance. For me, it's good cash. It's volatile cash. I, like you, have had some precious metals for a very long time. And it's lovely to see my savings appreciate as opposed to depreciate.
Right.